Now, if as of recently all the volatility and craziness in the stock market has you a bit more concerned than maybe you want to be, then this video is going to be perfect for you because we're going to go through 7 different higher yielding ETFs that generally speaking are all relatively very safe. These ETFs are going to offer at least some stability no matter what happens in the market next. And based off the last year, as we can see right here on the volatility index, we have had a pretty rocky ride so far. Now, all these ETFs are going to offer not only substantially more income generation compared to the general markets, but also, like I said, relatively safe because of their own strategies. So again, if you're a dividend-focused investor that wants some stability and wants a high amount of income, well, then make sure to stick around, drop a like down below, and let's get right into the first ETF. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now just to sort of have a base here, the abbvie ETF, which obviously tracks the S&P 500, yields around 1.21%. Now I know yield is only one piece of the puzzle, total return, growth potential, everything else is also very important, but for the context of this video, I want to share with you guys 7 different ETFs that are going to yield substantially more than 1.21%, but like I said, also offer some stability, even if there's some volatility in the markets. Now the first ETF that yields around 3 times more than the abbvie ETF is SCHD, or the Schwab US Dividend Equity ETF, one of my personal favorites. SCHD's objective is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Now this index is very well diversified, and especially as of recent, a lot of money seems to be rotating into some of these boring dividend payers, which has been amazing as an SCHD holder. Now SCHD has offered around 13% return every single year since the ETF's inception, sometimes more, sometimes less. And it's offered investors just like myself stability, tax efficiency, dividends, and more in dividends because of the massive dividend growth that this ETF offers. Now for those reasons, especially during market volatility, ETFs like these ones are sort of a safe haven, at least if you ask me. Another ETF that's relatively low beta, offers a nice amount of income and diversification, is the Amplify CWP Enhanced Dividend Income ETF, or DIVO. Now DIVO is one of my personal favorite ETFs, even though it doesn't necessarily get all the credit it deserves, in my opinion. That's because DIVO buys into high quality dividend oriented stocks, and along with that, DIVO uses a cover call strategy on individual stocks. Now because that names like Caterpillar, Visa, Home Depot, American Express, high quality dividend growth names that don't necessarily yield that much, are going to offer you almost a 4.8% distribution rate, and that's of course because of the cover call strategy. Now also along with that, dividends and because of that cover call strategy may provide lower share price volatility versus the overall market during times of broad-based market declines, which as of recently, we've seen a lot of that. Now, like I said, I don't think that many investors really see DIVO as necessarily all that impressive, but to be fair, DIVO is offered sometimes 16-17% return per year, and on average around 12%. So DIVO not only has basically trailed the S&P 500 since inception as far as annualized returns, but also has done so in an income-oriented format, which definitely might be interesting to some of you guys. Another relatively high yielder that a lot of investors might be missing out on is the iShares Advantage Large Cap Income ETF, or ticker symbol BALI. Now it says why BALI? It's its #1 active US large cap exposure, which honestly who doesn't want more of? Systematic stock selection process seeks to benefit from data to uncover insights faster at a greater scale and with more precision. Now #2, it says seek to enhance monthly income, seek to enhance dividend yield by selling call options. So because this one once again sells call options, there's going to be a lot more income potential, but along with that, some downside protection, which during broad-based market declines can be helpful. Now, the investment objective says the iShares Advantage Large Cap Income ETF seeks consistent income with lower volatility than the broader US equity market, which again is exactly what I'm trying to share with you guys on this video. Now, as far as how much yield we're talking with this one, the distribution yield is around 8.42%, and the trailing 12 month is around 7%. So again, you're getting a lot higher yield compared to the general market, but along with it, you're getting income potential and a relatively low beta product. Now, another one of my newer favorites is QDVO, the Amplify CWP Growth and Income ETF. This ETF is very similar to Devo. It's also brought to us by Amplify ETFs. It says growth and high income potential, seeking capital appreciation from growth-oriented stocks with high monthly income from option premiums and dividends. Now, it says equity exposure with lower volatility. Again, very important if you don't want to see your portfolio whipsawed day after day like we've been seeing recently. It says covered calls and dividends may help reduce volatility versus the overall market during times of broad-based market declines. So this ETF is going to give you exposure to names like Apple, Nvidia, Microsoft, Alphabet, tons of large cap names. But because of that covered call overlay, you're not going to see as much volatility necessarily, and you're going to see a distribution rate of 9%, which is massive. So again, if you want exposure to some large cap names, but through a covered call income-oriented strategy, QDVO is definitely worth looking into. A few more names that are going to be generally less volatile, but also offer you a ton of income potential. JPIE, the JP Morgan Nasdaq Equity Premium Income ETF, an ETF that has been beat up and hammered as of recently along with the rest of the market, but still has been paying out massive amounts of income as the most recent 30-day SEC yield, almost 11.5%. Now, this ETF offers Nasdaq 100 exposure, but with less volatility because of the covered call overlay. Now, like I just shared with you guys, around 11.5% 3-day SEC yield and around 40 to 50 cents per share per month to investors. So again, another good option if you, like myself, want some more Nasdaq 100 exposure, but want it in an income-oriented setting. JPIE is definitely worth looking into, and especially with the way it's been trading as of right now, it's getting down to those numbers where I'm almost ready to load the boat. A few more higher yielding ETFs that are going to offer you some downside protection, especially during the market volatility, but also offer you a ton of income potential. SPYI and number 7 is going to be QQQI. Now, SPYI is going to offer you S&P 500 high income exposure, where this one's of course going to offer you Nasdaq 100 exposure. SPYI is going to yield around 12%, and just to be clear, if the market goes down, if the underlying S&P 500 drops in price, along with the Nasdaq 100 for this one, both these ETFs can of course lose value too. That's one of the questions or criticisms I get a lot of times as being sort of a more dividend income focused investor. A lot of people ask me, well, what's going to happen if the S&P 500, for example, drops in price? And I simply say that a lot of the ETFs that, for example, invest in the constituents of the S&P 500 could also lose some share price. But because this ETF utilizes a cover call strategy and pays a high amount of income, there is the potential at least for a nice solid total return even during years of volatility. Now, SPYI, like I said, pays around 12% distribution rate as of right now and around 50 cents per share per month as of recent. Now, QQQI pays around 60 cents per share per month, at least on average over the past several months. Now again, are these names, along with the others I talked about, potentially going to drop somewhat at least if the market declines? Well, of course. But these names, along with the rest of the names we talked about, do have the potential to remain at least somewhat steady and consistently offer distributions, even if there's some short-term volatility. So there we have it, guys. Those are 7 different ETFs that I think are going to hold up just fine relative to the rest of the market, and that's if there is some more short-term volatility, but along with that are going to offer you a substantial more amount of income compared to the rest of the market, generally speaking. Now, out of all the higher yielding ETFs that we went through, along with all the rest of them in the market, if I were to ask you what's your number one favorite higher yielding ETF that you think is going to offer some stability and high income potential during whatever markets we see, comment down below some of your favorites. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.